So it's interesting. Economic and finance principles hold true over time, over countries, over industries. And again, it's a little bit of a conundrum that the Fed is moving so aggressively, and yet what would be the usual consequence has not yet happened, a recession and rising unemployment. And so why is that? And again, while these principles hold true, on each occasion there's usually something that's a little bit different. It is not different in that the principles remain time tested, but there's always a unique variable. I think this time you've got to look to the consumer, and then if you look further into the consumer, why is consumption so high? As Abby Joseph Cohen recently said, all you got to do is look at hotels, airlines, restaurants, and the price of Taylor Swift tickets, and you can clearly see the consumer is really strong. The San Francisco Fed recently published a paper on this trying to get a sense of excess savings, and you've heard different bankers talk about that, whether it's Jamie Dimon or others. They talk about the amount of excess savings that was accumulating during COVID, in part because people couldn't go spend money, and you'll see two notable spikes in the rise of this excess consumption estimate when the checks came out for COVID. What you've seen since then is that same excess spending power has moved into the red. They're burning through cash, or certainly seem to be, at a level that we have never seen. So what concerns us is, does the Fed reach that point where all of a sudden they get traction using their blunt instruments of money supply and increasing interest rates at the same time that the consumer finally runs out of excess purchasing power? That's our primary concern. Maybe they skirt by. Why? Look at the labor market. So we're at 3.5%. We're at one of the lowest unemployment rates that we've seen. Gosh, I don't even think we saw 3.5 in the 70s. You got to go back into the 50s to get something lower than that. So the labor market's incredibly tight, and it's pushing upward pressure on wages. So for the first time, if you look at headline CPI, wages are actually outstripping inflation. So they're actually getting a little bit of a net pay increase. Will that continue? I'm not so sure. Inflation does look like it's moving down. What's helping is commodity prices. And so commodities have rolled over. What's interesting is if you look at core inflation, which is the less volatile basket, excluding food and energy and the like, it's still solidly above 4, actually almost at 5%. So something tells us that the Fed is going to remain hawkish. And yes, the consumer is buying us time right now. But unless you see some radical bailout yet again, and who knows, we've seen some crazy things already happen. And I think that there is going to be some interesting political pressure this time because of what happened with Silicon Valley Bank and other banks. We bailed out banks once again. Are you going to bail out Main Street along with that? So interesting to tell, but again, it looks like the money's running out.